All business activity is subject to the dynamic nature of market forces. Failure to anticipate these dynamic forces can cause the demise of any prospective business venture. The fundamental concept of supply and demand refers to precisely how much a product or service is desired by buyers. Classic definitions of supply and demand require entrepreneurs, economists and accountants to reflect upon the relationship between a product or service and the current trends and desires of potential buyers. Demand refers to how much of a product or service is desired by buyers. The quantity demanded is the amount of a product people are willing to buy at a certain price. Such quantities are evaluated to correspond to the demand within the markets. This demand is assessed to reach an optimal price for any given product. The relationship between price and quality demanded is known as the demand relationship. Supply represents how much the market can offer to meet such demands. A correlation between price and how much goods or services are supplied to the market is known as the supply relationship. Forces of supply and demand cause the market price to increase or decrease in order to find a market equilibrium price. When the quantity of both supplied and demanded are equal, there will be no shortage or excess in the market. In business, the relationship between price and profit has to be carefully considered when running a successful business, as it will reflect the total value of any organisation. Price is determined upon a reflection of supply and demand. When calculating the expenditures of your business, there are two different types of costs which have to be evaluated. These include explicit and implicit costs. Explicit costs include fundamental expenditures such as rent, production and labour. Implicit costs are those investments that hope to bear a prospective future return. Total costs are the accumulation of both of these types of expenditures. Total revenue is the income a business receives from the sales of all goods produced and is determined by multiplying the price received for each unit sold by the number of units sold. Profit is then determined by subtracting the total cost from revenues. As price equates to the cost of a product or service, profit, in contrast, refers to the financial gains that a business makes. The connection between price and profit are relative to one another, as this price determines the amount of profit that a company will make once costs have been deducted. All business activity is subject to market forces, and a failure to anticipate the dynamic interplay within markets and the presence of rival businesses can lead to the eventual demise of any business. Certain market forces can dramatically influence the success and failure of any organisation, and it's the responsibility of the business-minded individual to be aware of these issues. Market structures are classified in regards to the amount of active competition. A concentrated market is one in which competition is, for the most part, absent, but in terms of market idealism, the highly sought-after situation is the environment of perfect competition. Markets are crucial in business in order to respond to consumer needs. Therefore, it is important to know exactly what those needs are before launching any product. By anticipating trends in the market and latest consumer trends, businesses can identify gaps in the market in order to take advantage of new opportunities. In essence, a market, whether physical or digital, is a place where buyers and sellers meet in order to trade products and services either on the high street or online. High levels of competition force the price of products down, as competition allows retailers to find methods to cut production costs and offer products at lower prices. The need for superior products allows businesses to search for innovative new ways to impress consumer demands. A happy customer will always return, so by providing helpful and friendly services, companies can increase customer loyalty. This has been a tutorial on understanding the business environment. Thank you for watching.